We are neutral in this comparison of SIP and ULIP, presenting both options objectively. The data here is based on AI-generated insights. The numbers may vary depending on specific plans and market conditions. Hi, I'm Kannan, a mutual fund distributor, here to bring you clarity on SIPs and ULIPs. This is the fifth video in our SIP Insights series, where we've previously covered comparisons between SIP and mutual funds, lump sum investments, deposits, and stocks. Let's start by understanding the core purpose of SIP and ULIP. Both SIP and ULIP involve regular, market-linked investments. However, while SIP focuses purely on wealth growth, ULIP combines investment with insurance. In short, SIP is ideal for those seeking a clear, focused investment strategy, while ULIP offers life coverage along with returns, though often at a higher cost. Next, let's compare the costs associated with SIP and ULIP. SIP has a lower cost structure, primarily an expense ratio ranging from 0.5% to 2.5%. ULIPs come with multiple charges, including premium allocation, policy administration, and mortality fees, making them costlier. The total costs in ULIP can range between 4% and 8% due to multiple layers of fees. In contrast, SIP costs are simpler and typically lower. Now, let's talk about liquidity and accessibility. Think of SIP as a straightforward journey, simple, transparent, and easy to navigate. With clear processes and minimal costs, it's designed for those who value control and flexibility in their investments. In contrast, ULIP can feel like navigating a maze, with multiple layers of charges, lock-in periods, and complex structures that make it harder to understand and operate. In summary, while SIP offers transparency and ease of operation, ULIP often requires more effort and understanding to manage effectively. Let's compare the control and transparency between SIP and ULIP. When it comes to managing your investment, SIP gives you full control, offering a wide range of fund choices, clear fee structures, and the flexibility to switch funds whenever needed. ULIP, on the other hand, limits your options and comes with a more complex, often opaque fee structure, making it harder to fully understand. In short, SIP is like an open book, simple and transparent. ULIP, however, can feel more like a closed book. Now, let's move to returns and performance. Imagine investing with SIP like traveling light, efficient, with fewer costs weighing you down, allowing for better long-term returns. ULIP, on the other hand, feels like traveling with heavy luggage. The multiple charges and fees can drag down potential growth, making the journey more complicated and less rewarding. Let's now discuss tax benefits. SIPs offer tax benefits under ELSS, with up to 1.5 lakh rupees deduction under Section 80C. ULIPs also offer tax benefits under 80C and 10D, making both tax-efficient investment options. Lastly, a quick look at some other features like death benefits and surrender value. ULIPs offer a death benefit to the nominee, while SIPs do not. ULIPs may also offer loyalty additions, but the higher charges often outweigh these benefits. What's the best solution? Let's compare ULIPs with a combination of term insurance and SIP. Let's break down the numbers. By investing in a SIP alongside a separate term insurance plan, you get the best of both worlds, higher insurance coverage and better returns on your investment. For example, with a 5,000 rupee monthly payment, you could secure 1 crore rupees of life cover through a term plan, while investing the rest in a SIP could yield higher returns. In comparison, a ULIP offering a 25 lakh rupees cover may have a lower final corpus due to the multiple charges embedded in its structure. In conclusion, SIPs are an excellent choice for investment growth, and ULIPs, though offering both insurance and investment, tend to deliver lower returns. The smarter alternative is to keep your insurance and investment separate. Use SIPs for wealth building and term insurance for protection. This way, you maximize returns and achieve better financial outcomes over time. Watch our previous videos for more insights, and contact us for personalized training sessions on investments and AI tools. Thank you for watching, give your comments and subscribe us.